to the Breakfast Club. This is September the 4th, 2024. Welcome, welcome, welcome. Well, I hope you've all had a great evening. What an incredible down day that was yesterday. We got to capture a lot of awesome trade there yesterday. And it looks like we're sitting in a nice little consolidation here this morning. We have had a little break in structure to the upside right now. On the 1 minute, looking for this new regular hour. So if you look at the regular hour. It's a regular trading hour gap right there. That was from yesterday. We have a swing low. We have a reversal pattern here. A trade back into this right here. This candle here. Trades back into it. Aiming for the first high. And then back into the range. Using your fib tool if that's your choice. I do like this breaker here. We're real close to hitting that. Actually hit this old low here. This is a breaker. It takes out that high. Return to that there. Getting a reaction off of this inside. So right now I'm about 51% bearish. If we're below here, we're back up inside it. Trading down. I want to see it clear out these lows here and use this candle to continue going lower. Reaching back into this candle's high or 50% of that range. There's a small fair value gap sitting right here. That's on the 1 minute, on the 1 hour, or 5 minute. Back up into the premium of that small range here. So I'd like to see that get back down into this range. Leave this open if we're going to go higher. The relative equal lows below us here. And we've got obviously lots more lows below us, and the drawn liquidity. There's a lot of regular trading hours or new week opening gaps below us. So the drawn liquidity could be lower today to the 8,400, 18,400. $18,600 to $18,400. For now, we'd have to get above this high, start pushing higher into these relative equal highs above us, and more into the liquidity above us here. So we do get a retracement. You want to come back to about 50% or more, hold that, and then start driving for these equal highs. Or if we're just going to start gunning for them, you're going to see this high get taken. Natural gas, creating relative equal lows. Looking around 1420, 1452. If we can get above that, get some support on that, run for the equal highs. We've got equal highs above us, now equal lows below us. We take out these equal highs and come back to take the lows. Right now you're in the midpoint of that whole range between the highs and lows, so it's anybody's guess, but it looks like there's a little imbalance above you here for running slightly higher. Bitcoin, I was in this one a few minutes ago on this reversal here, and just traded to 62% right into here, discount rate, and it hit it and then continued for the equal lows, relative equal lows here. So once it takes out these equal lows, look for a reversal back into the range again. We have relative equal highs here now and lows. Soybeans hit their objective yesterday nicely, just over 50% of the range of those two candles. We've returned back to this fair value gap we'd mentioned here now. We're getting a nice reaction off of that. I want to see that continue pushing higher and reaching for the liquidity above August 5th. So that's where I'm looking now. Now that we've come back to here, tap that. Now you want to keep going north. We've run the liquidity out here. We have not come back and given ourselves an opportunity to get in here or here. So once these highs are taken on a close, there's a little fair value gap above you here and an order block. So the next kind of upside objective I'm looking for is right here. And we'll ask ourselves, will it freeze there, just roll over, just clean out the liquidity here and come back into this range? This would be my next area right here. So if we're looking at 50% of this, you can almost reverse project this. I'm going to do this. So we'll run back into this order block here. That reaches the high there. So that's the first level I'm looking for, then this level, to see if it comes back to this level. If we just continue gunning through, the next level will be right up in here, right off that candle's low. This fair value gap here, holding price. The bodies are holding it. We have relative equal lows below us. So you want to keep your eye on this wick here, 50% of this wick. And sugar, yeah, that's where we're looking for sugar. Coffee gave us the response off of here. We've come back into, see how we've traded below that little gap. We've traded back up inside it. Now we're continuing lower. We are equal lows now. We want to see this just come back into there one more time, into this level, if we can. Hit that, react off of that, and then we're gunning for that level right there for now. Live cattle, it's given us our reaction that we're looking for on the 29th. We're looking for it to go higher, and it is slowly creeping up higher, looking for these equal highs here, and we're looking to get above this order block's mean threshold, and then above and into this fair value gap above us here, and these equal highs, where a little pool of liquidity is sitting. So we want to see this level here provide us some support to continue to push higher. And cocoa, we were talking about cocoa for a while now. We're watching this little gap inside here. We've traded all the way up. We've rebalanced it right here. It's considered rebalanced now. As soon as we cross out of it, as soon as we drop out of it and back into it, then you can consider it balanced. It's done the work in there that it needs to do. It drops through that today on a close, come back up, and we need to support off that one more time and then start driving down. That's my next downside objective for cocoa. So far it's acting just the way we wanted it to. And lumber, we're looking for lumber to come back up into that breaker, but it's just come back up into the consequent encroachment of that SIBI, and we're continuing to peel down. So again, my downside objective is here. It's been there for a while now. And my downside objective for lean hogs is here, but that was back in August. So I don't have, for some reason, it's not renewing. Let me just jump on something else here. Let's go. I don't know who they are, but and then let's go back to lean hogs. Let's just do lean hogs futures. See if that can, oh, there we go. So remember we're looking for here. And look, it gapped way down here. So if you were going short there, you got a payday all the way down to here because it gapped way down on you. So it overshot where we were looking for here. So that wouldn't have been a stop loss. That would have been a massive gain. Ah, that's hilarious. So now we're sitting inside this very large range here. We're working that. So we'll see if we work through that, come back up on top of it, and start working higher. Gold. We're still inside a small range here. What are we looking at? 1 hour chart, eh? Dip into this. You got to see this high get taken out. If you're going long on gold, you got to see this high get taken on a close. Use this high, and that's Fair Value gap, this old Fair Value gap here, as support to go higher. Otherwise, you're just inside this little range here. Premium discount. You've got little fair value gaps above you and at the discount range. So we're inside the consequent encroachment of this premium array here. So if you do see it kind of degrade, I'd like to see it come back and tap this one more time before going. Higher. If it eats through it, comes back, finds support at it. Look for the mean threshold of this candle, which is also the bottom of the fair value gap. Hourly. If that gives way, then we're losing the mean threshold here. We're looking for lower prices. I don't know why it says thing keeps popping up. If anybody knows how to stop that thing from popping up there, let me know. Our little bear flag people are just chomping at the bit for this to go lower. Oh, we have above us right here on the hourly. Oil. Remember back in, must have been probably May, June. I wanted us to run these equal lows out here, and it pulled all the way back into May, all the way back into June. I thought for sure we'd be taking a run on this liquidity here, but we didn't. Now it looks like we're giving it another attempt to get below these lows and eventually this pocket of liquidity here. And then I'm going to take my little candle here and we're going to go there to there. And look, see how it came down into the wick. 25% shows weakness, weakness. And we haven't been able to get past the 25%. So if we can hit equilibrium of that wick, that will be enough to clear out all this liquidity to return higher. So that's my long-term look for oil. Look for the 65.36 on the downside. But let's keep our objectives close right now. And they are, let me just remove all that stuff up here. Yeah, look for the first objective would be take out yesterday's low. Where's this today's low? Nope, today's low just took out this low here back in January. We've returned back to the old low. Now you want to see this continue pushing lower and start digging into this candle's wick, which is 50% of that wick you'll find is right on top of this candle's wick. Overlapping. Yeah. Next downside objective, 68.27. See how we react off of that. And then the next after that, 65.36. Oh no, 66.82, then 65. So those are my next objectives for oil on the downside. I don't want to see this high get revisited. If it does, just tap into it. And then you've got the mean threshold of that candle. I suppose it could return all the way to this candle's 72.21, 71.98. We'll keep track of it on the lower level. See where if it's going to retrace back up into here. But otherwise, on the long term, those are my three lows that I'm looking for. Oh, and look at this little hourly. Looking at this on the hourly on that stock we're looking for. I don't know why we're still obsessing on this thing, but went right back to the discount array. Equal highs. Reverse. You don't get an opportunity to get in on that. Wait for a trade below this candle. It does. Trades back into it here and inside that fair value gap imbalance over here. And we trade lower to a discount array inside a large range. We're getting a nice reaction off that now. Now you're stuck between here and here. So and you're almost in the middle of that range off this breaker. So the breaker was used again. So I want to see this eat through the breaker, find some support in terms of the rock face again. You're looking at this fair value gap here. You want to get through that and run above this old high here. And use this breaker as support to continue going higher. If not, if this rolls into that breaker one more time, and we continue to drive lower, or just runs back up into this fair value gap, and pushes lower, look for these lows to go, and these relative equal lows, and then back into this price gap down here. You got relative equal highs here. You know they're not going to leave those untouched. So anyway, that's what I'm looking at for that little stock. Just get back over here. Look at this on the 1 hour chart. This is where we were looking for yesterday for it to turn into, and it did. Nicely right there. Finished up, and then we went into the run below, pop back up, we're right back inside it again now, and we're looking for lower prices anyway. So we're back up into the consequent encroachment of this fair value gap here. Pull a wick to wick. So the bodies are respecting that 50% range. And take that wick, draw that all the way across. Right here. Precision. Not an algorithm, hey? That's all supply and demand. The last buyer finally got his price in right there before, or seller finally got their price in right there before it finally weakened everything and then it finally collapsed. I don't think so. So we're looking for lower prices now. Let's look for 15-minute chart. We have a reversal here. We've taken out these highs. Small little fair value gap above you here. That SIBI's not quite filled yet on the last 25% of that range, of that higher 1 hour fair value gap. The last 25% isn't filled yet. So now we've traded below here. See this? We traded back up inside it here. So the bodies are respecting this. And now we're trading below here. So I'd like to see us trade back up into this one more time and continue going lower through this little box. I'm going to draw here, and this is the discount. Area of interest. We can get through that, find some support at that, and continue pushing lower. We're looking to dig down into that lower range again for oil. We'll see where she's like after 10 o'clock. If we run back up one more time, take out these highs, then create a reversal. We've got this breaker up here. So far we're bearish and remain bearish until we trade back above this fair value gap and this one here. Ideally, I'd like to see, now that we've taken that low, if we're going to go bullish again, take out this fair value gap and use this order block here, key off to go higher into here. Those are the kind of things I'm looking for oil. I've got 6 more minutes. And good morning, 12 people. Who have we got on the show this morning? 14 people. Good morning, good morning. You can see how inside this range. All right. So Morning, Abs. The conversation just finally popped up on the side here. Morning, D. We got PMI at 8 a.m. 7, 8, 9. Good morning, all. Good morning, Hounds. Abs. Oops, sorry, that was yesterday's jolts today at 8. Okay. Is that 8 your time or 8 my time? Because if it's 8 your time, you're in Utah, aren't you? Abs? I'm up here in the mountains, mountain time, so 8 o'clock is long past me. I'm 7:26 Canada time in the mountains, so that's already 9, coming up for 9:30 already New York time. Min, good morning. Greg, how you doing? Fiddlesticks, good morning. Joe Mac, Mac is in the house. Greg, good morning. Does OPEC matter on crude oil? Of course, yeah, sure. Absolutely. What are we looking for news today? Let me see where we're at. Put my filter on here. So 9:45, we got the Bank of Canada rate. That's not going to jolt, so is it 10? Okay, so that's 8 o'clock for us. We're on the same time frame there, Abs, I think. So yes, 8 o'clock for us is jolts. Then another Bank of Canada rate. Ooh, this could make things move. It could make things move. Hans, Darren, do you look at equal lows at 17,745 this week? On the weekly? Let's have a look at the weekly. Ooh, look at that. I will look at those, and I do look at those, but they're not in my wheelhouse right now. They're not. There's so much more to gun for here, and you know, you start looking at those objectives, unless you're playing a weekly chart. For example, this is how you would have traded if you're just a week trader and you just put your money on and let her ride, let her buck, as it were. You see this reversal right here on a weekly chart. So we've been doing it on a 1 day chart or 1 minute chart, right? And Michael says it's fractal. So here's the proof that it's fractal. You look for a reversal and it's right here. This candle opens, trades through this on a close, and one candle trades through the objective we'd be aiming for in one candle, closes below that. So now this becomes the objective for me. Anywhere from this candle's wick low to the wick high, which is also the bottom of that fair value gap. I'm expecting that to stay open now. So what do? Opened up, we trade right back up inside it, and then all the way down to, and this is where you get to see the power of the rejection block. We're literally right there. This one is lower than that one. This one's low. Look at the low over here. The low is 17,333, and look at the low on this one, 17,346. That's why rejection blocks, you pay yourself at rejection blocks, because here's a great example of all your profits eaten back up to your entry. So you would take some money off there, or you use that fib tool like I showed you before. You do this on the weekly now. Imagine this. So you get to 50%, move your stop loss to break even, take half your trade off, and then you go Just watch. So you take half your trade off at 50%. We haven't got to 62 yet, so you wait. So you're back here still. It gave you a bit of a squeeze, but you're trading on a weekly chart. So you leave the stuff alone. You come back and check it a week later. It comes back. Then you hit 50%, 62%. You move your stop loss to 50. Then it hits 70%. You move your stop loss to 62. Then watch this. Look at this. It comes back. It does not hit you on a close. It literally opens, trades down to 75%. So you move to 70, 78%, move to 75, 80%, 88%. I move to halfway when it gets to here. And then when you get to 88%, last piece you take off at the rejection block and then the old low. So that's a weekly chart using a fib tool. And you would have paid yourself. That's a massive run. That's 2,000. So from your entry, anywhere inside here, we'll say, we'll take right from here if you want. Right from that level there. That's 742 all the way down to here. That's 410, 411 handles. 411 handles to rejection block, so 400. That's craziness. Anyway, it works. It works. So in this case here, I'm looking for, so we've returned back up into this order block here. So we traded into it here, went all the way down, came back up. You can start your trade all over again, right? You start that trade again. You want this to stay open. If it trades through it, then you're on the wrong side. And we're looking for this fair value gap here to get filled. Now I like this right here on the weekly. We have not taken out these lows yet. So the only swing we've taken out is right here and right here. So this fair value gap on the weekly, where's the weekly? Do I have a weekly here? Yes, I do. It's an inversion now. So that's the weekly. So if this was the swing and we're looking for a reversal to take out these highs or to come back into this premium array that has not been hit yet, that has not been tagged, and we're looking for this. I'd like to see this dip into here and then run back up and take that out, or use this to go lower. Look at the wick. So you take your 50% of that wick. You want to see that wick give way, and then we're gunning for the lows. So how we finish off this week, whether or not we finish above this or close through it and below it, and then start next week trading back into it, anywhere inside that, preferably the consequent encroachment, and then start pushing for the lows. Then I'd be looking for those lows down there. So that's how I'd be kind of looking at that, Hans, on a weekly basis. And wouldn't it be great if you could catch this on a weekly? We're expecting this candle to run back up, and if it hits that, we look for a daily and a 4-hour reversal, and then start zeroing in on the hourly at 15-minute, 5-minute to catch that nice little swing point right there. So if we go back to this day here on July 22nd, go back to July 22nd. Let's go to the days on July 22nd. Oh, it was the week of July 22nd. So right in here. So you see we have a high here, fair value gap, 17, July 22nd. Here this new week starts. Looking at that fair value gap, you don't get anything there. You have a fair value gap in here. We trade back into this order block, right on the money. A short begins right here. So then you take August 1st and you look for a perfect entry reversal here. If that's not perfect enough for you, you look for your entry. You say, okay, well, That looks like it's hit it. Now go to the August 1st on a 4-hour. Second. Where's August 1st? Oh, right here. So see this right here? We took out these highs. We're back inside this fair value gap here. You've wicked into the gap. August 1st. You tap that. As soon as you get below here, and you trade below it, as soon as you come back into this candle here, you go short. So you're looking for right there, short. And that's where we finally maxed out on that weekly that we're looking at. So you just look for a waste of zero in if that daily wasn't perfect enough for you in that terms of that entry right there. Then you just keep drilling down till you find where you're expecting the turn on the weekly to happen. Just drill all the way down to the 1 minute and look for your opportunity. Like you could take this one here now and say August 1st on the hourly. August 1st. Right here. There's this big gap here. Body trades through it right here. You trade back up inside it and you go short. So there's the hourly. And this reversal here. What's that one? As soon as we trade above that one on a close, right there. See how they all, then they start to work on it and then you start to go higher. And that was a nice little run higher. Anyway, it's a cycle that repeats itself over and over and over again. So there's nothing to do with supply and demand, like Michael says. So our regular trading hours, there's our gap. It's our regular trading hours. Keep your eye on the 50%. Yeah, we're in the same place there, Abs. It's a change in direction, not so much a taking out any lows or anything. We've retraced back into this range here, right back to this order block, filled this fair value gap here. Look for this, we traded above it, we traded back inside it now. We've already taken that high. So see how we're banging around inside that fair value gap, Abs, right now. We've come back, found support at this. I want to see this start pushing higher now. Lovely. Watch the 50% range there. So hit 50%. Get some motivation. Look at that, right on the 50% mark. Lovely, lovely. Give us a fill, lad. Give us a fill. Morning, Curryfish, or good evening. Whereabouts are you at, Curry? I've probably asked you before. I'm sorry. I'm coming up for 60, so the brain's not so good for remembering details. You were saying you were going to bed, so you must be the other side of the world. I like that. See how that just froze right up on that opened tippy tappy and start pushing higher. I like to see this now. Start working this upper range. I got to trade in right here, and I'm in profit. So I'm going to stay in profit and see if we can't fill this fair value gap here. Nope, just took me out right there. Probably going to run higher now. We come back to here, 50% of that. I like to see that go higher there. Dang, nabbit. I always trail my stop losses tight. So if we use this 50% level, we've traded above it now, so I'm expecting it to trade higher. Give me that consequent encroachment now. Keeping in mind, as soon as you take out these, these old highs here, we're looking at that fair value gap there as an important level. Put your 50% lines up perfectly with this old high right here. %. That just shows no intentions of coming back here. I want to see that just book out of here now. Leave this piece open and just start going. Say, nope, I'm not. I've got strength. I want to get out of here. So that's where you want to see that 25%. Shows you a lot of strength. There you go. So 25 is your, you kind of want to see it, don't want to see it break 50. But 25 is your level that you want to see it actually hit off of that, because that's your level of weakness or strength. That's how I kind of, Michael's described this as the 25%. If it just taps the 25% and it rejects, it's weakness, it can't get down there. So, or strength, it wants to go back up. Or if you go up to 25% of an up close wick and you lose it, it just hits that and starts to peel away, then it's a sign of weakness. So that's kind of the, so now I don't want to see 50% of that wick give way now. And that would be right there. Yeah. Is it going to do it again? Start driving back up again? Just close up below it. I still want to see this stay open here for sure. There's your breakaway gap. Go higher. There you go. See how it still doesn't come back to the 50%. It's at that 75. Just enough to take that guy out. Now we want to see this regular trading hour gap fill. Right here, and watch this candle here. You can see the equal lows if that gives away. It came up right up to 25%. Don't fill that. Look for this here. I'm going to take out these lows here if you want to get back into this range. This could be just a bear trap. Trade it below it, tapping it right there. See how I chart below, tap. I want to see this candle give way and these lows first before you consider taking this for short. I'm bearish right now. We're inside that reversal. This could just pop right through here, get on top of this, and now you got trapped in here thinking that was the short. And they're this close and they're overlapping, you use this candle here, because this is going to show you a bear trap. That goes trap. Bear trap. The 15 1-hour chart, we have small fair value gap above us here. Wait for this news release. See where she goes. Get relative equal highs. Lows. Feels like it wants to, this is just drawing buyers into a buyer's market here. And they're going to slam that down against them. Here's the 10 o'clock. And they did. They ran them out. Didn't it feel like that? Didn't feel like they were just drawing these people in to gun it right down below them. Run back, take them. The liquidity below the market here. As soon as it hits these lows here, I just want to show you what a 15-second chart would have looked like. Once those lows were gunned, look at this right here. There's the reversal. Body trades above it right there. The close on that candle, look right here. Close on that candle is 869. The low on that candle, 867. Just closed above it, ran all the way back in. Bodies are respecting it. Look at that. And then we have the reversal. You got to be quick to catch it. And you got to be saying, do I really want to take that? Then your fib tool all the way back up into that range. And look, if you just hit that fair value gap high, drill through it. Now wait for this thing to end here. If we get through this candle and find support at this, remember that's a huge fair value gap to return back into. So I want to see this one here get taken with a bold candle. And look for that candle support if you're on a 15-second chart. 1 minute chart, I want to see this guy get taken right here. Unless we just close above and then we use this whole block here. You'd have to wait for your ideal entry would be down here. That's a fill. Almost a fill. Just a few handles short. Candle here now, or use this to go higher. Below it, into it. We're inside this one and this one right now. Watch these equal highs here now. I'm looking for this candle here. Go higher. Mind your regular trading hours gap. It's right here. So we traded above here. We're back into this candle here. I want to see this lift up and start going higher now. I can retrace back into this candle. I want to see this candle here stay open though. If we start trading through this on the downside, then I'm on the wrong side again. Here now. That high's been taken. trace back into this range here. Optimum trade entry reversal. Good morning, Lauriston. $10 silver bullet. It's 10:07. Now you want to see it really start to drive through this fair value gap above you here. If it closes below it, then we're looking for these lows here. Look for the mean threshold of this candle here to give way. You see it stay inside here now. Watch where it closes. There's a small piece here, still hasn't been filled yet. losing its luster for me now. You want to see it really get some legs out of here. We're back into this range, stuck inside this fair value gap here now. We're going to clear this candle's high to the mean threshold holding price here right now. We come back inside it, drop below. So now you want to see it start coming back up and piercing this high. Otherwise, if this gives way here, then we're looking for a run down it below these lows. And this has already been filled multiple times. So for me, there's no reason for it to get down low here unless they're looking to go lower. So you just want to see it start really getting some power here and climbing out. Back into this candle's open. You don't want to see this support, and keep going lower. I want to see it push through this candle's mean threshold and use this again as leverage to go higher. Or use this as leverage to go lower and coming back into the mid, this fair value gap here. Patient can you be? Let's look at some other trades we were talking about. Bitcoin got above here, reached for the highs. You didn't get an opportunity to get in on here or anywhere inside here. That candle did not close above that high, so you didn't get a chance to get in on anything. It just ran those highs out back into this premium array. This one here, you don't get a chance to get in on that one as well. Run down, you finally cleared out this fair value gap here, or sorry, this breaker right here. You've come back, find support at that, look for a lower. You're in an extreme discount already, so I wouldn't touch that one. That soybean call we had this morning, it's paying you dividends now. We're looking for this to keep pushing higher off that level. We talked about it coming back to this level and pushing higher, and that's exactly what it's doing. It's good. And we're still looking for this one to freeze up in this level right here. So we're still looking for this to continue going higher. It is. Sugar's looking for those lows. That's good. That's all panning out there, and we still have not reached that high there. It's a shame. I'd like to see it have reached up and tapped that before coming down here. This is still climbing, looking for these equal highs and run right back up into this breaker right here. Running for these equal lows now, cocoa. My objective is down here. Lumber, my objective is down here. And lean biggies, my objective is up here. Gold. Remember that area we've lined up this morning? Came right down into it nicely. And now we cleaned out those highs. So there was your reversal. You came back in. If you got gold this morning when I gave you this, you had a little bit of a drawdown here. Quickly whipped through. Your stop loss should have been sitting down here or below the 50% of this wick of this order block here. And then running for those highs, you just nailed a nice $15, $14 gold run. You're welcome. Oh, this is back to our micro. I'm looking for this, a run back up into, there's nothing here on the hourly except a little imbalance, which we've already hit here once. I like that fair value gap above us here. Oil, it's come down to that little box we talked about yesterday, and we're still waiting for it to. Oh, is this a new box I put this morning? Yeah, new one I put this morning because this one was an old one. So yeah, that's the new box, and we've hit it. Yeah, I was putting this up here this morning, so that was the area I was aiming for this morning, and we've hit it. So I want to look for a continuation, see how we act inside here. If we drop below this, the fact that we've actually wicked through it is a nice sign. I like to see that reverse come back into this, push lower and take these lows out. Again, remember we're overall bearish on oil, down to 60, is it $65? Oh yeah, these are the levels here. So first one is 68.29. We've run these lows. We break through, taking the lows. Now we'll see if this closes up in the next couple of hours, go higher. And this is a slow, insidious morning. We have a little low taken out here. This little area here becomes interesting for me. See right there, body trades above. We came back into it. We've tapped it a couple of times. I want to see that really start gunning higher now. Thanks, Lauriston. Take care, buddy. There we go. We want to see that start really rocking now. And there you have it, the fill of the opening range. At regular trading hours. And hopefully you got to see how price action continues to dig down. We traded into it all the way back into this SIBI here. And we're looking for this level to hold. And it literally came down and hit it and held there. So that would have been like the perfect entry. Then you want to see us climb above here. It climbed above, found support one more time. And now you're looking to go higher. Keep an eye on this level here now. Looking for that upside objective again. In here. I want to see this stay open here now. Find support off here and push higher. Came back and filled this fair value gap here. Let's see, find some support off the regular trading hour gap now. Start pushing higher. Find support here and continue pushing higher. It's a slow day today. How are you enjoying your price action, folks? I'm just looking for that upside objective of 0.6 or 0.72. Remember, you've got your stop loss or your fair value gap above you here. Looking for 172. That's the bottom of the fair value gap, and then the run up into the fair value gap is up to 109, 106. And we're running back into regular trading hours. Mr. Pips, hey, good morning. Hey, Darren, the guy was right about not seeing you on YouTube live stream page. Yeah, I was wondering why there was only like a few people in here this morning, but that's okay. I understand. I don't know how to, I'm going to have to contact those guys about that. I have no idea how to contact them though. Send feedback. There, I gave him some feedback. Captured a nice little reversal in oil here. See this right here on the 1 hour or 15 minute? It's actually on the 1 hour. You'll see it come right back up and fill. This right here, I got short right there off of this. That was the ultimate entry. So it trades above, then it goes up. And then I just got out down here at this discount array. It's a nice little trade. So anyway, it's got to get below here now. It's going to trade below this discount array and then start pushing lower. Like if you look at that on the 1 minute chart, you'll see what I'm talking about. Took out these old highs here and creates a reversal, but the reversal's right here. And you're in the discount portion of it. So for me, it's not really worth it to take that from that little dip down. So you trade below it here. You're waiting for this to trade back up into it to continue getting shorter. The ideal one would be right up, back up in here. You want to see that stay open, trade back up into that fair value gap, and then run these lows out. So I like the way we're still using this regular trading hours gap as support to push higher. This order block's got a hold price now. Yeah, it was a wild reverse in crude for sure. Still looking for those low, the low end run on crude. And this is just painful to be in. So if you're in this trade I gave you this morning for the run, I'm already out right here at this regular trading hours gap. I wanted to see it go a little higher. I wanted to see it get up into that 172, and it's really stifled. And for me, this is not, this is where I can get beat up in here, because this is where you start second guessing yourself, because you're expecting to see nice clean price action, start making the runs. So this whole waffling around here and then returning, and yeah, it'll probably still make it up there, but it's not quick enough. I do like it moving a lot more cleaner than that. We need to push this out to others. Thanks, Shepard. Here I am saying, now I want to see it's not moving fast enough, and here it goes. Now there you go, there's your 172. We should be hitting that right there now. 172. Right there. That's hit the objective. So if that was your upside objective, we called for that this morning, and we've hit it. We gave you a really beautiful entry here, but it was kind of a, and this one gave us the reversal. It did not get us all the way down to the low, but you're into the consequent encroachment of that. And if you're still not happy with that one, you look for this swing here. It takes it out there. We come back in. We talked about this as the entry to continue going higher. We needed it to get above here. It got above that right there. Then it traded back to it. We talked about that, and then continue going higher. So you want to see it take this one out and then trade back to it and go higher. Trades above it and it comes back to it right there, right on the money, and then trades higher. We wanted to see this regular trading hour gap provide support. We traded above it, finally found a little bit of support, come back, bodies respect it now. We finally hit the objective of 172 up to 106. Every time we take out a new high, keep your eyes on those fair value gaps. Bissies on the other side. And then you've got these the drawn liquidity is up here now at 140. If we can get through this fair value gap here, look for the next fair value gap above you, and he's let me get that out of the way. The upside drawn liquidity is right in here at 160. Here's 11 o'clock. This would be a great time for price to match out to peak out right at the fair value gap fill here at 105. And then look for a reversal back into the range, and then look for this low to get taken out. and trade back into the regular trading hour gap again. We got a fair value gap below us here. And oil's doing that little reversal we're looking for. If you're watching oil, see, this was like, if you're waiting for it to return into this fair value gap here, you didn't get it. You wanted to see that first, and here we are, we're starting to push back up into it now. So the ideal place would be in here or here. You don't want to see it trade above or close this fair value gap in. I'd like to see it just come back up and just top over the top of it, and then start running back down again, and then start gunning for this liquidity down here. So all these people that think, oh, it's finally coming down here. Nope, it's just come back to the top of this breaker right here. Or sorry, this breaker right here. It's come back into the open. Takes out all these highs. Let's come back to that. Now you're looking for it to retrace back into this range here. Pull your fib tool from top to bottom. Have a look at the 50% mark. Say, where is the likelihood of this potentially trading to? And is there something that lines up with a 50%? Right there. See that 50%? This puts us right in that fair value gap. So if we pop right up into here, 62% might put us in here. Let me have a look at what 62% puts us. Look at that, right on the money. Is that algorithmic, folks? 62% puts us, remember I was saying I'd like to see it just above that right there. And what does it line up to? 62%? Coincidence? Maybe. What do you think? Do you think they were just, the guys are running back to the running back to their trade house and saying, I need to trade this. Wait, let me get an order on here. So I'd like to see that get back up into that 50% range. We did come back up and tap this right here. So keep your eye on that level. See, between this one going down and this one, we've traded above this level. I want to see that tap it now and go back into that range. And there's 105, 108, 109. Now I want to look for a little reversal around this time. Now that we've filled that fair value gap, it's done. Are we going to keep climbing up into the next one, which is right here? Trading above this, so looking at time now and wait for that. See how this macro begins at 10:50 right here. We trade, there's a little tiny, watch this, I want you to see this. Little lows taken out right here. Look at that little fair value gap right there. Are you guys marking these on your chart? Look at them. Body trades above them. Wick through them. They create the, yes, wicks do the damage. Bodies are staying above. That little swing below these lows takes out these lows. And now you want to see it get above it and then clean this one out here and use this high as support or that candle as support. So we ran all the way through it. It came back to the high. Look at that. Tapped it nicely. And then continue going higher. These are the little hot rocks. This is the crack. So it's so small. That's a little crack in the rock. If you can get your little piton in there and keep climbing, look for that leverage, find yourself some footing, get on top of that and continue going higher. And now you're digging into this fair value gap. Again, this is our drawn liquidity up here at 140 to 160. I think I'd love to see this thing freeze up right on there, come back for a little bit, and then start pushing through for this later on after lunch. Now we've got a clean reversal on the 1 hour. If we trade above that and close and come back inside that range and find this support at this level to push higher still, we could be seeing a return back into this range to 50% or more on a higher time frame. And remember oil. Oh, yes, there we go. So I want to see this get below here. And oil is paying some dividends. Ooh, that's a nice little run today. I've been killing it in oil today. Remember this little run back up to that level we're looking for? Find support there. Where you go, back up to 50%. I just cashed out at 50% right there. Okay, so now let's look at this one over here again. I want to see this giveaway on the downside now. Now we've traded below it. Watch this trade back into it. Fair value gap, this guy right here. And see how this one order went through that one? It did not take out that low. Then it finally traded below that low there. I want to see this low here get taken on a close. And then see us trade back into that fair value up there. Leave this open and continue going lower. Oh, remember time and price? Remember me telling you about time is important. And we're looking for a reversal. Here's the reversal. And did it tap it? What's the low on that candle? I may have just missed it while I was looking over here at oil again. Right there. Nope, didn't quite tap it. What's the low on that candle? The low is 82.75. High is 81.25. So now we've got a nice little break-in structure. Fair value gap. Let's come on back. Give us a little kiss. Take us to the party. Crude works on the same also as ES and NQ. Crude is all run on an algorithm just like everything else. Crude runs everything that creates a candle, even back on this surgical thing we've been looking at and analyzing this surgical level here. See how price breaks below the breaker again, comes back, finds support at it, pushing for lows. Price imbalance, literally gapped up a little bit here into this price imbalance, reclaims this little tiny order block here, right back to this fair value gap reversal. Take out a little high here, another high. These are equal highs here now. You look for this here and here. You trade below it. Runs right back up, probably hit your stop loss there if you're on the wrong side of it. So let's say you're on the wrong side of this right here. Let's say you were like, okay, Darren, you said if it trades below this, which it did right here, then I can get short on that. So there's your ideal entry. So you get short on it, and all of a sudden it closes above, and you go, oh, I'm wrong. I'm on the wrong side of this. If it trades back to me, I get an opportunity to get out. That's my fail safe. That's the fail safe I taught you in that one video inside go through my list, and you'll find the fail safe. That's the fail safe. Your stop loss is sitting right here. Your fail safe saved you before your stop loss gets hit because you're on the wrong side of it. You wait for it to cross back over here again. It does right here, and then trades back into it here. Gives you your perfect entry, and then you get short. Right? If you're on the wrong side of it, it traded above again. This just told you I'm on the other side of it now. Get on board, and we're heading for the next lows. You say, well, Darren, I'm not prepared to play in that kind of messy environment again. I want to see this low get taken. Then that's what you're waiting for. You're waiting for this low here on that candle right there to get taken on the downside. Trade back up inside it right here. Now you want to get short. So all inside this candle, when this body traded below it right there, opened. It started below here. It literally gapped down from here to here. You go, great, and then if it trades back up inside there, which it did, feels the little gap that it's created from the open, and then starts to trade back down again. So we've already taken this low out, which would have been your objective. The next one is you're looking for these relative equal lows below you here. Anyway, everything's on an algorithm. Have we hit that now? What's the high on that candle? High is 81.75. Low is 82.75. So I'm just one handle shy of that little guy there. So look at the wick right here. You got to look at the wick. I was just learning this in Michael's videos because right now I can almost hear him yelling at me saying, Darren, the damn wick, the wick. Watch this. 50% of this wick returned to watch. And bingo. And let's use our equilibrium. Blammo. Look at that. Literally closed below it, came back up to 50% of that wick, and then now we're leaving. Right? Now what you want to see is you want to see it run come on down. Where do we want to discount array? Right here. Premium array, discount array. I want to see it run all the way down into here now. Come back, give this a kiss. Leave that open. Or if you're just going to come down and take me out, then fine. Sorry, Craig, I'm not answering any of your questions here. Same algo, why is that not displacement up and change of trend? Sorry, where are we looking on? Let me get back to oil here for you and answer your question. This is a reversal, right? Break in structure. We have a swing point, break in structure to the upside. inside our range. We traded back to the order block, inside it. Remember I was telling you, here's the fair value gap reversal. We've taken out this low here. We've traded above it with one bold candle. We managed to go through, here's the close. We traded through one, then we closed through another one. So this is the one you're looking for, not down here. We've got bold, you want to see this stay open now. So as this rolls back over and hits this order block, you want to see it now reject off and come back into 50%, 62%. There's your optimal trade entry reversal. If you're into this, still expecting these lows to get taken now, you want to see it trade. That's why, sorry, let me answer. I don't want to jump ahead of you here. Why is it not displacement up and change of trend? It's just a reversal back into this small range that we've created here on this downside. This is what we're looking for. Remember, we've got this, all this has been taken out by this run up. We've got this fair value gap on this side. We want to see it trade below it, come back up inside it, its equilibrium, or sorry, its consequent encroachment, or the high, so we can get low on it again, right? And it doesn't, it just keeps trading lower and lower and lower. And you go, well, now inside this range, it's extreme discount. I don't want to buy a discount for it to go low when you've got all this sitting above you. You want to see it retrace back up into a premium so that you can get a discount off of it. So you want to see it get above 50% again. So you wait for a reversal. Either if it takes that out, that's fine. If it keeps going lower, it goes lower. Then you look for this candle, these sets of candles here as support to go lower. If that stays open, it gives you a little reversal. Here we see this little low created here. Then it gives us another low, gives us our fair value gap. We trade through it, come back inside it, and now we're back inside that range. So now we're gunning for that level that we're looking for, which is at 62%. We're calling for this level right here. And we said we didn't want to see it stop there, right? Look at that. Schmuck. And now we're getting a reverse off of it. Called this as it was going down here. So we're waiting for that reversal. I saw this, took that. So now you're back into the range. Now you're getting back in line, in sync with the market. You want to see this continue pushing lower now. Does that help you, Craig? What does it take to turn crude bullish? Oh, we need to break this high here. We need to take this fair value gap out on a close with this one and continue going bullish. Now because we're in this one going short and this one going long, you got to say to yourself, I'm inside a range now. So you've got one that's a discount array and one's a premium array. We've gone from the discount, this one right here, up into a premium right here, this BISI on the opposite side, SIBI, BISI, opposing fair value gaps. This one's a SIBI, that one's a BISI, and I swear to God, Michael's going to teach this one day. I haven't discovered this for myself. I'm sure this is something he's going to teach. Looking at opposing whatever is this SIBI here, you look for a BISI on the other side that's in a premium inside the range you're in, and that's usually what it guns for. And sure enough, it ran right up there. I was calling this right before it happened, so you heard it here. It hit it, and now I want to see it react off of that and start coming lower. Now, it needs to go, if you want this to continue going bullish, you got to get above this fair value gap, use it as support, and push through that order block. Once we clear that order block, use this order block as support to continue going higher. Because all this is just a retracement back in here. Because remember, the overall trend or overall push is bearish. So it doesn't change for me until we get above here. And then you're going, all right, now what else can I aim for in this huge range here? The next one to gun for is up in here. So I'd be looking for 70.94 to 71.07. If that remains bullish. Right now, we haven't taken out any other than these little highs here. And we've got back to an option trade entry. If we take this high out here again, you want to go bullish earlier. You want to see this, see how we've traded below it. You want to see it stay below that. Now we're trading above it. You see right here, came back and tapped it. Now you're looking for this to continue going higher. and we're into the mean threshold. So you're stuck on the mean threshold of this and here. So those are the two candles I'm on. This, you want to see, let me get this thing out of the way here, this fib tool, remove it, and I want you to see what you're looking for in terms of bullishness and bearishness. So this fair value gap here, you want to see it get taken on the downside to confirm you want to keep coming back into that range. So now we have a smaller range right here, from here to here, and you pull your fib tool in there and you'll see that we're compressing now. See how we're below 50% and we're coming back into this old low or old high right here. And then suddenly we start trading above it again, right? So now you say, all right, I want to see that provide support and push through this mean threshold. That mean threshold, you see how it's holding price? It literally says, yep, I traded above it, but I hit the mean threshold, snapped off of it and ran back into that range. So now you're stuck inside here. Now you want to see this price action move out of this, come back on top of it, get through the mean threshold of these two candles, use this for support to go higher. Or you want to see this low get taken, create a fair value gap, and then start looking to push this high to climb higher. Otherwise, we're just sitting inside this thing right now. So there we go. You want to see it's, remember, we're bullish or bearish overall. So I want to see this. I want to see it come down. I don't want to see it climbing up any higher. That's an optimum trade entry. We want to see this stay open. It did. And now I want to see it keep coming back lower. Please repeat taking out the fair value. Yep. Sorry, that was probably a question from a long time ago. Greg, do grains run up on the algo? Yes, everything that has an everything that has a candle on a chart is run by the algorithm. Everything. Don't believe for a second, unless it took your you know, I think Mike only looks at it as supply and demand or volume or buying and selling is only in the commodities market, because that's truly the world's marketplace. It's or it's market as in shopping center, shopping mall, market, food court, whatever you want to call it, right? So there is a supply and demand factor involved in volume for commodities, but otherwise all this other stuff is algorithmically driven. We want to see this, see how it's traded below it, came back up inside it. We want to keep seeing this wick start giving way now on the downside, because right now you're banging below it, above it, below it, above it, and we got bearishness overall. So overall, I want to see this keep coming down. Watch 50% of this wick now give way, and then we're looking for these equal lows below us. Live cattle, yeah, live cattle. It's there is a lot of volume based stuff in that, but it is algorithmically driven. I think I've got a live cattle in here somewhere. Live cattle, yeah. And I've showed this multiple times. This is algorithmically driven. That old high is taken out. There's the BISI on the side. You want to see it trade below it. It trades below. If you don't get a chance to get in on that, which you don't, it trades below it. So you look for this candle right here to get traded back into. Once its low gets taken, its low gets taken right there, and look where it trades back into. Boom. And then finally runs down and takes that. So you may not catch these initially on the run, but volume and all that stuff here, algorithm drives price. You may not be able to get in on that. You could do a turtle soup. I'm not really good at turtle soup, so I can't profess to look at that. But when you look at these highs, I want you to draw your eye across and look at the order block. Look at this highest up close candle, mean threshold. Look at it right there. And what does it line up with? Mean threshold. Do you think supply and demand actually froze it right there? Like, sorry, no more cows available today, or we've sold our last cow. Good, now you're in a sell frenzy. We bought our last cow. We're selling cows at a discount now, right? Algorithm. Like, man, if you guys can't see that that's algorithmically driven, shish, you're in for a doozy of a hard time trying to accept it. trying to trade it any other way. But anyway, that's cattle. It's an algorithm. It's an algorithm. Look at that. Right back inside the equilibrium. Lovely, lovely. And I bet you Michael's going to talk about that. If he's talking, if he's in, I don't know if he's on right now. Let me see if he's on right now. Is Michael on today? Nope, he's not live right now. But if he was, I know he'd be saying it. I know he'd be saying, look at this wick. Look at that thing right there for the short. I've done extremely well today, so I am not going to push my luck anymore. I'm just going to move to the sidelines now. Live cattle, I'm in second trade of the day. Got in the fair value gap. Chris Alley. Chris, buddy. You got in right here on this little tiny one, right at the equilibrium, because it's just a little hair above that one. That candle's high is 81.25. This candle's high is 81.75. So, and it's delicious. I love Michael's stuff. I love it when he teaches us some good shit like this. Wick. Oh. Well, if you like what we did today and you want to hit the like button, I appreciate that. I know there's only 22 of us in here. We're not going to make much of an influence anywhere, but it's really nice to know that you guys, I appreciate you guys sticking around for my show. I'm going to stick around here for a few more minutes and then look at that, right to the fair value gap. And we're getting a reaction right off the time we're expecting a reversal. Were you guys present? Did you hear all that stuff when we're talking about that? As it was coming into this time here, we're going, it's 11 o'clock. We're looking for a reversal now. And here it is, 11:06. And the 11:11. And then we get the reversal. And oil is really mucking around, but it's going slower, but it is getting down there. See how it's working that fair value gap there? We're running down. We got through the mean threshold of that candle, or the consequent encroachment of that candle, and we've come back up. What is this one bang? Oh, right off the 50% of that whole range now. Now you want to see it continue degrading. Now I've got to have the patience to stay out of the market and let this ride. Let her ride, baby. You want to see it get through the mean threshold of that candle and through the opening. And I'm looking for a little box. I was going to put a little box for it to trade to. I would say, all right, my area of interest is right here. Keep your eyeballsios on that. And how it acts on that one is of interest. So these equal lows, you want to see them get taken now. And my area of interest for this fella is going to be right here. I'm second trade in at 0875, 0875. Chris, 0875, 0875. Oh, Chris, buddy, you're right there. 0875. You're like right, right here, right off that guy. Good for you, man. Way to go. You paid yourself here, though, right? Hopefully, you're paying yourself here. I'd like to see it get down into here, but make sure you're paying yourself along the way inside the range. Use whatever method you're doing. Chris, you're rocking it, buddy. I'm glad to hear it. Just hopped out at 31. Okay, that's all right. I'm done for the day. Good, interesting question. If you buy live cattle futures and hold it until it expires, do they deliver cattle to you? No, I don't think so. Wouldn't that be interesting? Hey, they just all of a sudden Amazon turns up at your house with a trailer with a bunch of mooing, shitting cows on in your driveway, and your wife comes home. What's that, honey? We bought 50 head of cattle. Oh, we're gonna squeeze them in the backyard, but I hope you're hungry. But why is the huge move up not displacement? Craig. In crude. Oh, sorry. Here we go. Crude. Let me get back to crude again. Why is this not displacement? Sure. You could say that's a displacement. But then you want to see if this is going to hold price, you want to see it finding support off of old levels and continue to go higher. You don't want to see it tracing all the way back through. So if they're just gunning on all the people who are trailing their stop losses here, and they're gunning for these guys before they drive this lower, yes, that's displacement. Higher, we have break in market structure to the upside, break, break, break. And then you say, now I want to see that hold. Typically, you'd say, I want to see it come back to order block, hold price. And then when you see it starting to eat through, you say, all right, I want to see this fair value gap here, at least 50% of it hold as a breakaway gap. And you want to see that stay open. And it starts to erode through the consequent encroachment of that. Then you start to go, no, this is probably going down. So yeah, I like the way you're thinking there, Craig. As displacement for sure, but then you have to look for rules for that to continue to go higher. Oops, I shouldn't have messed with that. You want to see this go higher, right? And so you're looking for rules for it to support price, and if it doesn't, then you got to have your fail safe, and your fail safe is if this low or this fair value gap gets taken, or if you have a higher standard, you say this must remain open, a portion of this must remain open for me to be bullish. So I am going to give its consequent encroachment a, so for example, I want to see the consequent encroachment of this candle right there. If it starts to trade below it, it freezes on it, starts wicking below it, comes back up right inside 50% of it, and then continues going lower, then you go, nope, that's losing its strength. If we trade below this, now that becomes a swing reversal. So you're right, displacing to the upside, displace all through, and you don't even get a displacement. This would have been a nice candle to come back, give you an opportunity to get long. Nope, they just ran that straight through everybody who was trailing behind here. Okay, just trade you all the way up into this fair value gap, or this order block, that fair value gap. Nope, this order block right here. Ran it all the way back up. And again, there might be a higher time frame objective that's more precise there. But if you want to say, oh, good, look at this nice displacement candle, I want to see it come back, give us an opportunity to get in here. And also it goes whammo and takes out the next one. You go, okay, when you see it going up to here, you go, oh, good, would it be great if it could come back into this order block here? Nope, doesn't do it, doesn't do it. You say, oh, okay, well, maybe it's going to come back into one of these old highs here. You got big open fair value gap range here, and you go, okay, now I have to say what level of support, when does it fail for me? And that would have been right there for me. I would have failed, especially when you're looking at your overall bias is going lower, right? Oh, that's okay, Craig. That's okay. You'll find that there's got to be a set of rules for you to establish whether or not this was going to go higher. And displacement doesn't always mean that it's going to continue going higher. You've got to look for, I want a discount. If this displaces that high, you go, I want a discount to go higher, right? So if you want a discount to go higher, then you want it to come back into the levels we're looking for here or here. Pull your fib tool on that. Say, okay, if it comes back in and hits this order block here, or hits this breaker, which is right from that high to that low, these 3 candles, if it hits that breaker, I'm looking to go long, and I want to see this last little piece stay open or fill. Then I'm going to go long again because we're inside this range. So you're looking for a reversal. So for here, I would have to see a reversal here, or I'd have to see a reversal here to come back into the range. So there are lots of little rules you got to look for to confirm when it's going to fail and when it's not going to fail, when it's going to support you. And for me, that would have been it right there at 50% consequent encroachment of that wick. To go higher, I would not want to have seen it go any lower than that. At the moment it does, you go, okay, now we're looking at a much deeper retracement. So if I want to go higher again and I want to pick up a discount here, I want to see this consequent encroachment stay open. It doesn't. So you say, okay, I want to see it fill now. It doesn't fill. So you go, okay, well, we do have a reversal going on right here. If this candle here provides me some support, I'm going to get in on that. That's where I got in. And I was looking for it to run to 62% of this range, which lines up perfectly with the top of that fair value gap there. And that's where we got it. It hit it. And then you look for another reversal, which is this guy right here. You say, when if it trades below that, I want to be in on this, take these lows out. It trades above. You go, oh, I'm on the wrong side of that. Wait for it to come back, give you an opportunity to get off, because you think it could still go higher. So that's my fail safe there. And then when it trades below it again, right there, you go, oh, okay, now we're back in sync again. My stop loss is going to go up here this time because I don't want to see that run. It should not have to run back up there. It runs back in the fair value gap and then continues. And we're looking for those lows to get taken. And right there, they finally got taken. So that's it, you're out. Or you take a portion off of your trade. And then you say, now that it's taken this low, you look for potential reversal. And see how it hit that little downside objective? Maybe I was just a tad bit short on that one. Where did it go? Let me get this out of the way here. The discount array right here. The low on this, or the open on this candle, or low on this candle here is 69.75. The low on this candle here is 69.77. So it's 2 handles out. Sorry. I was out by 2 handles. Slap me with a piece of shoe leather. I was out by 2 handles. Now you're looking for discount array, premium array. And we're banging around. See how we're compressing here? We've gone big displacement candle, came back into the range, came into 62% of that range. Now this range from here to here, pull your fib tool. From here, and you'll see how this is compressing. I'm going to show you all the little small ranges that's happening here. Let's pull our fib. This little guy right here. Oops, let me reverse that. See how we were in this range to 62%. Now that big range, we have a premium array and we have a discount array. We made it through the premium array And now we were going to sell to a discount just shy of it here. And now you're looking for, so that ended up coming down to optimum trade entry reversal, 75%, right on the money. And now you're looking inside this range from either here or here. I like this bigger one up here, down to here. And look at this. This is the compression I was telling you about. 62% of that range there. So compressing. Now we're waiting for it to go blam, shoot up or shoot down. What's your overall bias for the day? Don't discount my little box down here, my friends. Do not discount my box. So discount, premium, discount, premium, discount. Thanks, Lovey. I still got a coffee here. They brought me a tea. What a lovey. Do you see those, Craig? Sorry, I don't know if this was like the same kind of analysis that you used to do back in the day. And look at our new opening gap. 940. Schmuck. Right on it. Yes, I want to see a fair value gap hold. Thanks. Need to confirm I'm an old-fashioned retired analyst. Slow to learn the language. Helpful. Thanks. Gotta go. Thanks for everything, D. No worries. Abs. He's probably gone already. The fair value gap validates displacement and two-part thought process. Nice. Triangle. Do those nice triangle. Do those exist? No. No triangles, no pitchforks, none of that shit. I don't know. I'm sorry, Craig, if you're using Bollinger Bands and MACD convergence and all that stuff, you're in for a doozy, because I never ever you'll never see me pull a volume candle or a volume chart. You'll never see me pull any one of those, and you won't see Michael pull them either. Pitchforks, MACD, all those other things. That's all retail thinking, man. They have zero to do with, and I know that you could probably find many examples of proving that they have worked in the past, but trust me, they're coincidence. This is truly algorithmic, and those things do not follow any algorithmic pattern. Sometimes they'll line up, but they don't follow an algorithmic pattern. So stick around, you'll see this every morning. We'll come in here, and I'm on a 1 minute chart. So I'm trying to show you how to stay in price action on a 1 minute chart. And if this was not algorithmic, you'd see that you'd see Michael's theories would fail miserably, right? And you can see how we've been able to stay in price action extremely well, and it works. It works. I don't mean to insult you. Please don't think I'm insulting all the incredible work that you did as an analyst for all those years. Please don't think that at all. It's that we are totally not retail thinkers or use any of that other stuff. It's purely whatever he's taught us from an algorithmic perspective. So stick around and try it out. You'll see over time whether it's crap or not. Nice triangles. Do you use the box is a fair value gap? This box is an inversion fair value gap, yes. See now how we're inside this range? We go from discount to premium, discount, back up inside this small range now, discount, premium. Now we got to bust out of here. We're running out of PD arrays to run to. See how this imbalance has been filled right there? We're right back up inside that little, this little swing's been taken. There's the reversal. We pop below it, come back up inside it, run down, take the low. It's repeating, but it's getting smaller and smaller and smaller. Now it's got to go, I got to get out of here. I got to bust lower or I got to bust higher.
So this is where you get to see the algorithm winding down. This is a classic compressed like a spring, and then boom, or boom. And I'm expecting a boom down. If we do a quick run up here, look at this little fair value gap above us. Is it a quick run on liquidity? Is it a quick run on price to go lower? We're coming into lunch hour now, so this is the typical thing you'll see bouncing around in lunch hour. You'll see this seek and destroy type moments where you run down, take out the liquidity below the market, then run back up and take the highs. And you can see it start taking this high, back to that low, that high, still inside this bigger range here. And we still got that little fair value gap below you here still too, right? And this was another box I drew this morning. Look at that bouncing off that box that I drew this morning. And if you track that one all the way back, it's inside this guy here. I think that's the one. Yeah, it's inside. Or is it a higher time frame? It's a higher time frame one. There's this discount array here. I don't see anything in here except this guy right here. There's a fair value gap right there. 69.32, 69.32. Oh, look at that. 69.32, 69.31. Is that an algorithm? Did it fill that fair value gap right there? Jeepers creepers. Come on. Take the high displacement. Run to the upside. Now, oh great. I want to see that hold price now. I want to see these stay open. They don't. All the way back. Okay. We're going into lunch. So watch those, the key time. You've got the next macro beginning at 10:50. Runs back up to the premium level. Remember, 10:50 to what? 11:10. Where did it end? 11:10. That's the macro. 11:50 to 10 to 11:10. Sorry, 10:50 to 11:10. Every hour there's a macro. I was an Excel guy, no triangle, retail world. Okay, I'll go as I need the help. Bought bonds for RBC in Canada. Oh, you did. You bought bonds. Oh, bond market. We could go into the bond market and I can show you some really cool shit in bonds, how the algorithm is managing bonds as well. If you're interested, let me know. I'll pop it up there and we'll quickly show you some of the stuff that's happened in bonds if you're interested. Wild stuff. Crude has the same time algos as indices. Everything is driven by the same time frames. As far as I know, I've never heard Michael say that they're not. I like crude oil, but unfortunately the micros, man, if you're trading micros on oil, you're still putting a lot of money at risk. Unless you're used to trading bazillions of dollars. All right. Let's look where we're at now. I got 10 more minutes and I'm going to head out here. I've enjoyed my time with you guys. Thanks again for tuning in. Yes, bonds and algos, small stuff. Give me a ticker for what you want me to look at. There's the box. Hello! We finally got it. Now we want to see this trade through the box. Premium, discount. A run back up. Did not quite catch that. But if you're in a short in that 62% that we called for, if you got the kahunas to go, I totally think it's going to stop right there at 62%. Boom! And as soon as I see a reversal, I'm going to get in on it. You got on it right there and say, I don't care. My stop loss is sitting here. Gave you a bit of a squeeze. And then I'm running to my discount array and you just got it there. Now, here's what can happen. Now that we're in this discount array, we've just taken out these lows. We could see this right here turn into support. We want to see this candle here give way, and then we'll start driving back up into the premium level again if we're running back into the range. So in order for that to happen, I need to see that one go and that candle there get taken on the high, come back, find support at said candle, which is a breaker. We have a low, a high, taking out a low. So we go low, high, low. Doesn't have to take that high, it just has to create a swing in here. These three candles make a swing. And we want to see it take that low. It takes the low. So this guy here is the one I want to see take above, find support at it, and start pushing back up into the range again. Or I want to see this, for it to continue going lower, I want to see this fair value gap here, that fair value gap there, which is this box, get taken to the downside. That's the wiggle room. I need to see that go as well. And then find support. And we're looking for down here, all the way back down here again. So I've got two things I'm looking for. So if you can argue both directions, if you're still in this, you still want it to go low. So looking for your fail is this. If that gives way to the upside now that we've taken those lows out and that candle gets taken, your stop loss would be trailed to here or here, because that right there would be the indication that if we traded above this, come back to it, that's our next area that we're gunning for, these little equal highs here. So my stop loss would go there because that's the fail safe. That's what's telling me the market's changing direction to come back into here. If it's not, then that should hold and we should continue going down and reach for liquidity below the market here and in here. So watch right here. And oil is finally giving up the ghost. So keep watching here and then watch that. So this is the change. This is the swing we're looking for. Swing. There's that 940 opening. Fair value gap. We want to get on top of that and get through this. Then we're coming back into this range again. If not, see how it's just come back up to the wicks inside that body there. Let me keep moving this. Consequent encroachment. Bodies are staying above it. You could see a run all the way back up into this here fella. Micro stuff. Craig Lesser, stick around here. This place will make you profitable and you'll never look at the markets the same. Also check out the Inner Circle Trader on YouTube and follow his 2024 mentorship. Yeah, Craig, I tell you, you want to learn anything about the lingo? Go there. He's teaching his son right from scratch on how to do this stuff. And he's teaching you all the lingo. Just go back to the first video, start from there, make a ton of notes, and you have to kind of pop on here. I'll do some hypnosis on you if you like. Erase what you've learned in the past and stick with only what you're learning in this thing. Don't let that old analyst brain kick in. Just keep sticking to what he's teaching you in the charts. I know it sounds terrible. It's like saying everything you did in the past was useless. It's not. That's not to say that at all. It's just that you're going to see something that's stunning and sexy. Look at that. See how we've traded above it? Right there. That's a good indication we have a change in direction. The reversal's confirmed when we take this high. I want to see it come down and go tippy-tappy right into here. There you go. Thanks, Chris. Everything is swing highs and lows, fair value gaps, and then best change. You are more helpful right now. I do both. Random walk theory is a lie. Got it. Tell me a ticker on bonds that you want me to look at, and I'll quickly go through that with you if you want. See how we're moving back up into this range. There's our change in direction. There's a little boop. We want to do that. I gave you a little boop. We want to see a boop, and you got your little boop, and now you're running above that. Craig, it's so sexy, isn't it? Isn't it just so sexy? TLT. TLT. My goodness, that reminds me of the old days. I learned timeline therapy. I taught timeline therapy, learned it from a guy down in the States. Let's go with bond market. So let's go with the new chart. And you said TLT, correct? TLT. NASDAQ. Is this one okay? 20-year bond? Eek, yes, you're going to give me a challenge here. Let's go with the daily. Holy crap. You can see I don't work on this one. All right, let's see. Let's prove to our friend that this algorithm is an algorithm. Bond market. Okay, let's get at it. All right, we have a swing high. We have these old highs taken out here. So you're looking for a swing. Once the high is taken, these highs are taken, you look for a swing opportunity. So you're looking for this. Did it take it? Nope, it just kept running up higher. Here's another one. It came down, actually hit it, and ran higher. And then all of a sudden you see this one here. That big gap, it trades below it right here, comes back up into it, gives you a short right there. Inside this range, you're gunning for this low. You're running for these fair value gaps below you here. You hit the low, you look for a reversal. Now that you've taken out that low there, reversal. Body trades above it, right there, and you don't get an opportunity to get in on it there, and it continues to run higher. Where does it run back into? Oh yeah, that little fellow right back there. You get to run that whole trade over again. So you're right back into this order block here. You hit it. So that's the breaker. So you have a high, a low, and a higher high. That high is taken out. That's the breaker. Those two together, they actually create their own high and break themselves to the upside. Anyway, back into that order block. Trade lower. Look for an opportunity. Because now you've taken out this low. That fair value gap's been taken. So you look for an opportunity. Nope. 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 And now this is the low you're aiming for. So you wait now. Wait for a reversal to happen. You want to see this one get taken to the upside. That fair value gap there. Now we've taken that out. Now we've created a new, and we haven't got it. It's not taken out. Their body still respects it. See that? You wait. Now it finally takes it right there. What does it do? Trades right back into it. Gives you a perfect opportunity to go long. Pull your fib tool inside here. From high to low. Right there. You're using that fib tool. Oh, sorry, let me put that back to where it's supposed to be. My settings, I have this on reverse. I think, yes. It's supposed to be there. So if that's the range you're in now, and you've got an opportunity to get in on that gap right here, trades back into it, you go long right there. You're buying bonds today, and it doesn't matter what the F is going on inside the world. You just go, I'm algorithmically buying, and as soon as you hit 50%, I move my stop loss to break even. I take half my trade off. I get to 62%. I move my stop loss to 50 now, take a portion off of my trade, and wait. If it hits 70, I move to 62. This is just my method, one of my methods for managing the using a fib tool. If you don't understand all these fancy jargon, fib tool is a great way to manage an internal range thing, because if it hits optimum trade entry reversal, which is it is right here at 62%, it starts traveling away on you. So there's your optimum trade entry, and it comes back to 50% there and takes you out. So you bought bonds all the way up. You trailed your stop loss. I don't know if you can trail stop losses. Can you trail stop losses in bonds, Craig? I don't know. In here you could. And then it reverses. You got this fair value gap here. You trade through it here. You finally close below it. There's your reversal. You're taking out these little highs here. And then when you trade back into it, look at that, right inside it, right there. And then boom, you're short again. And if you want to pull your fib tool from here to here, you'll see the same thing kind of happen right here. So let's say you want to get back into this range. Here's your, you've taken out this little low here and this little low right here, and you've traded back into that little imbalance right here. You see this, your body trades above it. If you trade back into it right there, you go long now. 50%, pay yourself at 50%, take half your trade off, hit 62%, optimum trade entry, and you're right back into that level you were waiting for it to get back into for a short, and away you go. Hits optimum trade entry reversal, takes out this low, comes back to the breaker, and then continues to go lower. You have a reversal, takes out that low. Here's your imbalance. This is a price imbalance, not a fair value gap. It's a price imbalance. We've only got one side delivery and a gap in price here. So you trade above it right here. This one comes up and you come down inside it right there. High, consequent encroachment, and low. 3 different levels you can enter in, and now you're long again. So algorithm, everything's algorithm, man. If you know what it is you're looking for, it's algorithmically driven. And then you pull your fib tool from here to here, and you'll see the same thing again. You'll see that 50%. So if you got in on that, for you bought bonds on the 2nd of May for run up to 50%, you hit 50%, take half your trade off, and move your stop loss to break even. Then all of a sudden it shoots up to 62. Now you move your stop loss to 50. Optimum trade entry reversal. Wait for this thing to get taken. Another discount array again. You don't want to be buying or selling at a discount. You want to wait for a reversal. You want to wait for a low to get taken. We've got this low here taken, so you wait for this fair value gap to get traded back to, or this order block. If it gets traded above, you want to see it trade back into it and then get long, running above here, reaching for fair value gaps above you, and then hopefully the old highs. If not, rejection block. Always pay yourself at rejection blocks. Here's another example of why. So that's over the course of a daily chart from December 23rd or 28th of last year all the way through to here. You see how algorithm drove that whole thing. I have no idea what went on in the bond with bonds, the news on any one of these days. Nothing gave me any indication that news of where news was going, where price was going. Just look at the algorithm. And that, again, you're going to have to get to the point where you have to trust that. You have to see it enough times to prove it. Once you've seen it enough, you'll see that, remember that fair value gap here? Retraced all the way back inside it right there. Look at that. And then discount, discount, premium, discount, premium, Sibby, Bissy, down, back up to it right there. And we cut through candles, Craig. We cut through candles. Hit it. Or if you want to get really sexy too and say, hey, look there, that consequent encroachment of that candle, I want to see a body get above that. Then look at this range here, traded back inside that range. So if you said, as soon as it gets to that level, I'm going to short it from there, and then I'm going to trade inside this range. Take your 50%. There's 50, shoots to 62% retracement. Funny how that's been happening a lot, hey? That's 62%. And then you paid yourself on the way down, and then all of a sudden it reversed on you. Doesn't matter, came back to 50%. You took half your trade off there, took another 10% off there. You wanted to see if it would ride all the way down into here. It just came back into the gap and then reversed on you. Well, when it gets above here, I want to see this candle and that candle provide support. So there's the reversal because it took this low out. So watch right here. It trade closes above and then goes boop. Literally opens above that level right there. Trap. Gives you a little boop, and then off to the races we go. And what are we running back up to? Premium array inside this massive range here. There's Darren's bonds analysis. Sorry, real quick, but hopefully you get the idea that it still is algorithmically driven, Craig. It'll open your eyes to algorithmic trading, my friend. I'm just going to march this along here. Oh no, I don't mean to. I really don't mean to insult the amount of work that you've done. I can appreciate hard work, man. I was a paramedic for 30 years, so things change all the time. All the time. So you're living in Canada, Craig? Or are you in the States selling Canadian bonds? See, we were talking about seek and destroy. Now we're going into 12 o'clock, right? You go into 12 o'clock, it runs the highs, runs the lows, seek and destroy. High, and we're talking about that before it happened. So we saw that run up here. There's the reverse, comes back inside it, and then finally takes these lows. And again, even in lunch hour, when the algorithm is eating its lunch, it's still giving us price delivery, coming back down, taking out lows. Takes out a high, you look for this, comes back inside it, trades below it. So for this fair value gap here to trade above it and then come back, find support, you want to see it support off of here to go higher into the range. It didn't. It supported going further down. So this is one of those ones where you got one that shows you down and one that shows you up, and they're literally overlapping. So which one do you choose? Neither, because you're in a consolidation and you've got one fair value gap overlapping. If this was a small discount array here, I'd say, yeah, you can bounce around between the two. But when you're in a consolidation, you must trade for premium to discount fair value gaps. And there isn't one here. This whole one is in the premium discount range in by itself. So you want to see that hold price, and go lower. So your optimum entry would have been like right there. If it traded above, it came back, found support. That's your fail safe to go higher. If it holds, you're running for these lows. Quickly grab a bit of cash while you're paying for lunch. It ran the lows out. Now you want to see it come back up into that level here. Get up on top of it, start running this high here, and come back and fill that fair value gap above you. If it doesn't, if it just finds some support here, I've got nothing down here that would tell me the price is going any higher or finding some support off of this to go higher, except this down close candle here and the half this wick. I don't want to see it come back and tap this wick, keep going higher. You want to see it drive through here. No, seek and destroy at the lunch hour. Ah, we're in Greenville, SC. Where's that? SC. Don't tell me SC is Seattle Central? No, Seattle. It's not Seattle. What is it? SC. Scintillating Connecticut. I don't know. But anyway, welcome, Craig. I'm glad you're in here. I'm glad you're open to the idea of learning something new, and you're getting to see clearly price action in a 1 minute chart. like I say, you know I'm full of shit if after 10 minutes of looking at the charts, if we haven't called these levels that we've been calling all morning and looking for support resistance at key levels, you wouldn't be wasting your time in here. And I've been doing this since July last year live. And Michael's been doing this for 30 years or so. So yeah, it's see how that body is still holding it. The wick comes back up into candles open right there, tippy tappy. Now you're looking for it to come back to here, like that little high right there. Leave this open and start pushing higher. Or if it comes back to the consequent encroachment, you want to see that no more than that, or half this wick right there. Don't fill it. If it fills it, ugh. All right, now you're between this guy here and this guy here. Those two. Come back, tap the tippy tap the high. Now you're inside that fair value gap. You're trapped. You're as a mouse in a cage, man. South Carolina, of course. South Carolina. Of course it's South Carolina. SC, I should have known that. I had a lot of friends in Canada from Royal Bank. And then Michelin tires. Nice. Michelin tires. Can we see Michelin tires? Michelin. What's Michelin tires? University of Michigan? No. What's Michelin tires? MT? Michelin tires? What's their ticker? Michelin futures. What's Michelin tires? Come on, let's have a look at that. See if there's an algorithm driving the old Michelin tire market. Siri. Hey Siri. Hey Siri. God damn, I hate this thing. What's the Michelin tires ticker? MGDDY. MGDDY. Michelin. Is that really Michelin tires? Oh, it's a private company. Let's see if there's an algorithm that drives those fellas. All right. Here's our little fair value gap. Body trades. We open above it right there. We take out some lows. Oh, sorry, take out this low. We return back into that fair value gap here. Anyway, let's say we started here in October. We're looking for a low. We want to see this fair value gap trade above. It actually gaps above it, trades back into it to go low, higher. Pull your fib tool from here to here, and you're looking for a run back up above these highs. And it's easy for me to see. I can clearly see it's going high, but I want to point out why it's going higher and what it's bouncing off of. So 50%. Mr. Your fib tool. I don't even know who this may not even be Michelin tires. There's 50%. Move your stop loss to break even. Take half of your trade off. Then it goes to 62%. Sweet. Pay yourself some more. Move your stop loss to here. Gaps down. Takes you out here. You've got money you've made from the opening here to 50%. So what is that? 44 cents to 90. So you got 50 cents you made there on half your stock. Then you took another 10% off there at 15.11. It came back, stopped you out. Ran through. Then you go, okay, now I'm just waiting for a reversal or this old high to get taken out. It literally opened above it. Let me get this out of the way. Opened above it. If you're savvy and you say, if as soon as it comes back to this old high, I'm grabbing it. That candle's high is 1573. This candle's low, 1573. You bought it perfectly. Zero drawdown. Hello. You're on a run. So you're aiming for the next high and the next high. And it gaps up for you and you go, great. If as long as that gap stays open, I'm going to let that keep running. I'm going to wait for it to trade below it. There's the reversal. See how the trade's below it? All of a sudden it goes, oof, and opens down here. You go, I'm on the wrong side of this now. It's going to go lower. As soon as it trades back up into it, I can get my trade off here. If you don't get it off there, you can get it off here. And now you've got the reversal. You've traded below that level. You trade back up inside it. Now you can get back inside with the market and you're running back inside this range here. Back to the gap. Old highs. Look at that old high. What's the low on that candle? 1628. What's the high on this candle? 1627. 1 penny. 1 penny. Anyway, you're off there. So here's your reversal. I've taken out that low now. Reverse. You trade above it. You trade back into it. Hello, let's get back on board. La la la. Off to the races you go. And I don't even know who the hell these guys are, but is it algorithmically driven? Hells yes, my friends. Hells yes. See, we're talking about taking that one out. Come back in. Look at that. Body's respecting it. So sexy. Oh, look at me trade above. And now we're running for seek and destroy, my friends. Seek and destroy. Anyway, that's it for me. I had fun. Thanks, Craig. I enjoyed showing you algorithms on multiple different asset classes. That was fun, and we got to play inside the markets today. So I really enjoyed this. I hope you guys got a chance to do the trades we gave you today. And if not, we'll be here again tomorrow, or give it another go tomorrow. And what are we at here? Oh, it's non-farm payroll. Let's not mess with this anymore. Non-farm payroll. Craig, as you know, non-farm payroll is not for professionals, not for people, not for players, not for participants. That's what it is. So we don't play with non-farm payroll. That's heavy manipulation in the market. So what you want to see now is you want to see a body trade above here and use this candle for support, or we come back into here one more time, capture this breaker. These candles here make a breaker of a high, a low, and a higher high. We want to come back tippy tappy. Close above this. You can use this for support to go higher. You want to see this stay open now as a breakaway gap and go higher. Look for this up here inside the range. We still have this little fella hiding back in here. Keep your eyes on that one. You got one here. Premium array inside this small range is right here. So just above that. What a nice little entry. Look at that. Slammo. So watch here. Now we've traded above this candle. I want to see this one hold price. If not, we've now traded above the high. Look for this candle, because now we've got a reversal after taking out highs. So you're going to be really on the ball to catch both of these. This, you want to see it go higher. That's your fail safe now. And look at that. Oh, Craig, it's looking sexy again. So you want to see this go through here now and with some intentions going higher. If it doesn't, and it starts pulling back off this candle, yeah, there you go. Come on. Don't just hit the middle of it. Drive through it. Come on up. Now, as soon as it hits that high,